Well, there's a lot to unpack for the week ahead in the stock market, so in this video, I'm going to try and share with you some important dates, what to watch in terms of earnings, who's speaking when, and maybe a bit of my own commentary on the market sentiment for the shorter term, although I am, first and foremost, a long-term investor, so let's get right into it. Before we jump into this, let me know down in the comments below if you do like this kind of video. I might do it every week before the start of every week if you guys like it enough, and the reason I ask is because usually my videos on this channel are super in-depth, highly researched videos with fancy smancy editing, and that all takes 10 to 15 hours plus every time. So this kind of video just lets me see you guys a bit more, and I always love that. And of course, you get to stay up to date with the market. So yeah, let's just jump into it. On Monday, we have Viant. That one caught my eye. They're reporting after the close. I believe this is their first report since their IPO in February, and right now they're trading just about under their debut IPO price. They're a programmatic advertising play, so think like the Trade Desk or maybe Acuity Ads. $3 billion market cap, very interesting there. If you're into the programmatic advertising space, definitely keep an eye on that one. On Tuesday, we have Huya, which is a Chinese gaming company. I guess you could kind of call them the Twitch of China. Very high growth. I believe they are owned by ARK Invest, so another one to watch there. And oh my goodness, the day everyone's been waiting for, GameStop reporting earnings. Last time they reported, I believe they were at $17 a share. And now, actually, I don't even know what they're at right now. $200 per share? Oh my goodness. Okay, yeah, I mean, I don't know. This one's going to be a crazy ride because they're going to have to dress to impress in order to keep up that valuation. At the same time, the case could be made that because there was so much shorting, it was artificially depressed, and we don't know the true value of GameStop. So we'll see what they have to say, where they are in their turnaround play, and what they say about their valuation. So that will be very, very interesting to watch. We have Bionanogenomics, a stock that I'm not personally in, but I know many of you watching are. The reason I'm not in this one is just because I want to try and stay within my circle of competence as much as I can. I'll invest in some areas that I'm not necessarily an expert in, but biotech, that's just an area that I'm like, I need to learn so much more before I can confidently invest in those. But I know a lot of you guys are in that one, so keep an eye out for them after the close on Tuesday. We've got Adobe, a subscription beast coming out here. They were actually the first big company to pioneer subscription business models back in 2013, I believe. Solid blue chip stock, another one to watch. At Home Group, I'm not going to go through every single one of these. There's just a lot of interesting ones all in a row here on Tuesday. At Home Group, ticker HOME, they're up over 1,300 or 1,350% in the past year. So they're up already over 100% year to date, meaning since January 4th, the first day of trading in 2021. So the expectations are definitely high for this one. And usually, when you see a stock run up into earnings, meaning the stock price, continues to rise into the earnings report, and say it's a high growth, high valuation company, sometimes they'll beat and then they'll still fall. And that's often because either they didn't beat by enough or their outlook, their guidance is not good enough to sustain the premium that they're trading at. Now, I personally haven't done a ton of research for At Home, so I can't say it's going to happen here. Curiosity Stream, another stock that I think is very interesting, ticker CURI. They were formerly a SPAC, I believe. It's a streaming service focused on what they call factual entertainment. So think documentaries and educational content. Very interesting streaming play, so we're going to watch what numbers they put up on Tuesday. Now, after that, on Wednesday, we have Vital Farms. This one I actually considered looking into, but then I realized they sell really good eggs. And that business model just didn't really speak to me. Maybe I should give it another look. Maybe I'm missing something in the bigger picture. There was recently a bunch of insider selling for Vital, and shareholders were a little uneasy after seeing that, and especially going into earnings. So we'll see what they do there. Perhaps on a drop, it could become more interesting. We also have Grow Generation. This one is one of the ones that got away from me. I looked into it around, or I should say I wanted to look into it around the $23 range back in November. It just took off since then. It's kind of like the pick and shovel play for the puff industry, if you know what I'm saying. Another high growth company. Restoration Hardware, up 500% in the past year. Absolute beast of a stock, reporting after the close on Wednesday. We have Momo, a social networking play in China. It's profitable and, dare I say, potentially undervalued. But the hard thing is, with a lot of Chinese companies, they trade at a discount because they are a Chinese company. And everyone has their own opinions on investing in China, but another one I just feel like maybe it's worth putting on people's radar. And then also we have Blink. All right, so I know a lot of you guys are probably in Blink as well. Personally, I am not. It's down about 37% since its recent highs. So expect a lot of volatility on this one. I bet it's going to see a 10% plus move in either direction. So with almost a $1.6 billion market cap, they better reaffirm that guidance or beat it. Otherwise, this thing could have more room to fall, in my opinion. And that's the thing right now with the market, is that a lot of these high growth, high flyers, high valuation stocks, they could honestly fall more before they become reasonably valued. And I own some of those stocks. And that's part of the reason why I haven't added to a lot of my positions, especially not too aggressively, because as a shareholder, even I know it's a lot of it's overvalued, but maybe not so much when I bought in, which is why I still hold it. And I think short-term valuation isn't necessarily a great reason to sell a stock, and that's why I'm still comfortable holding them despite kind of a rough time for growth right now. And so yeah, definitely keep an eye on Blink. With a $1.6 billion valuation and expected sales of 13.5 million, I believe, in 2021, this thing's trading at 117x forward price to sales ratio. So wishing the best to all the Blink holders out there. It'll be really cool to see what happens there. And then on Friday, not too much that I'm personally interested, but that's what we got for Friday. And not too much I'm personally interested in on Friday, but on Thursday we do have GAN reporting earnings as well, and they are a business-to-business supplier of internet gambling software as a service solutions. They offer turnkey technology solutions, and they're growing at a pretty rapid pace. I mean, they're expected to do 158% in revenue growth in 2021, or about 98 million in sales, and they're at a market cap of 985 million as we're recording this video over the weekend. So honestly, not terribly overpriced just from the glimpse of things. And this earnings, I wouldn't be surprised if their guidance is good to see an upward move here, but it could really go either way. Again, I haven't done in-depth due diligence on this one, but another one to watch for sure. All right, now we've switched to some other catalysts going on in the week, other events, things to watch besides earnings. There's still going to be some earnings in here, but I'm going to highlight some stuff that I think is especially important. Kicking it off with Monday, March 22nd. All week, they're going to be running these conferences hosted by B of A, Credit Suisse, JP Morgan, and they're going to be talking about things like digital consumer retail, healthcare innovators, and global ESG conference. And some of these you can actually get access to despite being retail investors. Just put in your name, email, just make up a company name if they ask for one. And then you can get access to some really cool insights from there. After that, 9 a.m., Federal Reserve Chairman Papa Powell, as they often call him, will talk at the Bank of International Settlements Innovation Summit, talking about how banks can innovate into the digital age. You're seeing a shift in the fintech place and kind of the older banks, and how are they going to adapt and keep up with these neobanks, as some call them, these digital banks. So not necessarily super important for the market, I'd say, but also pretty interesting. On Tuesday, we have Mr. Burr himself at noon, testifying before the House, talking about the CARES Act. Then on Wednesday, he's a busy man. We see Powell again testifying on Wednesday. This time he's testifying before the Senate, again on the CARES Act. And usually these aren't going to necessarily move the market unless he goes off script or they really grill him about something important and sensitive like inflation, and maybe he lets something slip. That's where we kind of have to be a little attentive to the market if you are looking at things intraday. If you're a long-term investor, right? Personally, I don't think there's a need to sit at your computer or your phone and watch your stocks all day if you're in it for 3 to 5 years, right? These dips are probably long-term buying opportunities if you can get things at the right valuation. So depending on your motive and your investing style, maybe you do want him to say something right. Maybe you do want him to say something that can give you a better deal. Just letting you know that's when he's going to be talking. Then at 11 a.m., we see DocuSign holding its inaugural analyst day. So the reason I highlighted this because, DocuSign is a high profile company. It's one that definitely saw a lot of tailwinds from the Rona. And, a lot of companies these days are wondering, are those tailwinds going to continue in the future? Are we going to see a drop in revenue from a lot of these companies that benefited from work from home? Now, personally, I don't think that it's going to be that dramatic if we do see a revenue drop in any of these work from home companies, because a lot of companies are staying work from home. So DocuSign, it'll also be interesting to see how much they can innovate in terms of product innovation, what stuff they have planned for us. So if you're a DocuSign shareholder, definitely earmark your calendar for that. If you can't catch it live, you can probably catch another presentation later. DocuSign is also about 22% down from its recent highs, and usually the best time to do a deep dive in a company is when it's down, and take your research extra serious because that could be an opportunity. I'm not personally invested in DocuSign, but you should always be researching companies. But if you own a stock and it's down and maybe you're in the red, that's when you got to double down on your research and say, did I miss something or should I buy more? That's a great question to ask yourself if you're ever red in a position or if you're looking for a new one. When they're down, that's the opportunity. So anyways, also I just realized when I was looking this way, it looked like I was looking off screen. So now I'm looking into the screen and we're on a different web page talking about Thursday, 10:10 a.m. Vice Chair, the Fed is going to be talking about U.S. economic outlook and monetary policy. Again, sticking to the script is probably going to be good for the market, or at least good for stability in the market and less volatility. If he goes off script and kind of throws a curveball or says something that the market doesn't like, that's when things can get kind of hairy, especially when we're in such a sensitive market. And, perhaps this is a good time to talk about something called beta. So if you don't already know what beta is, it measures the volatility of a stock, and you can also use it to measure the volatility of your portfolio based on the percentage allocated to different stocks in your portfolio and their beta. So you can do that calculation or just take a look at the individual stocks that you own. You can calculate your percentages later, but get a sense, the higher the beta is, the more volatile the stock in relation to the rest of the market. So if you don't like the big swings in your account, especially with how fragile everything is right now, then perhaps you could let go of some names that have higher beta that you're not necessarily super attached to and look to more stable names that you'd like to pick up for your portfolio. That's just another tip there I thought I might share. But going back to the catalysts and the events. So there's not too much that I think is worth mentioning here on Friday. I will move my face so you can actually read this, but yeah, you can all read it here on the screen, and I'm going to move my face back in 3, 2, 1. So yeah, keep in mind with everything that I just said, a lot of it is short-term stuff. And if you are a long-term investor such as myself, and you have maybe a 3 to 5 year time horizon on a lot of your investments, a lot of this stuff could cause short-term buying opportunities, or maybe put some stocks on our radar that weren't on our radar before because they've come back to a more attractive valuation. So with all this said, make sure to have your dip list, as always, what I call your dip list. And that is a list of stocks that you maybe really, really like. You love the business, you love the company, you think it's super bright, but the valuation's just not there right now. So if you have that list and you have cash, you should never be afraid of a red day. You should love red days, to be quite honest. Right now, I think the market is in a place where a lot of those high growth stocks that are trading at super high premiums, if things continue to not really go their way, they probably have a ways to fall before they hit a reasonable price. So with that in mind, get your dip list ready. And say I love Apple. Right? Say I love Apple, but it's a little expensive for me right now. And I don't mean in terms of stock price, I mean in terms of valuation. Because remember, stock price is not what you want to pay attention to. You want to pay attention to their market cap. You can have a stock that's $1, but $1 billion market cap, probably unlikely, but say you could have that. You could also have a stock that's $10, but the market cap is only 10 million. So again, pay attention to the market cap. And then find a simple ratio, like a price to sales ratio or a PE ratio, and figure that out for a couple of your stocks that you want to put on your dip list. So for example, price to sales ratio is just market cap divided by revenue. And once you find the price to sales ratio, you can compare it to competitors or other similar stocks in the industry and try and find a mean price to sales ratio, an average. And if your stock is trading way above the mean, that probably means it's a little overvalued. So maybe if it falls to the mean, then you might be interested in buying some. So you find that price to sales ratio, you can use that to actually calculate the stock price. And at that stock price, you just set an alert there, right? You just set an alert for Apple at that stock price, at that PS ratio, right? And then once that alert triggers, say on a red day, you've got your cash ready, boom. That's when your dip list comes in handy. And you don't have to panic if there's a big red day in the market, because you just wait for your list to get triggered. You just wait for those alerts to get triggered, right? If they don't get triggered, you're a happy camper. You still have cash. You're in a position of power, and you're waiting for those good valuations. If you don't have a dip list, then it's like, oh my gosh, everything's red. What do I buy? What do I buy? And you're worried it's going to bounce back tomorrow, or is it going to fall further? If you already have a plan, when you're a calm state of mind, you already have a valuation you like, I don't really see how you can go wrong with that in the long term. So anyways, I hope this video was helpful. Hope you guys are getting ready for this week ahead. Again, let me know if you like these kinds of videos, and I'll maybe do them every week. If you don't, and you just want me to stick to the super in-depth deep dive stuff, I'll try and grind out as many videos as possible. Very, very excited for the future of the channel. If you're watching this video, if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous. I said that like 1,000 times. I don't know how I messed it up.